Well, thank you for joining us today. I'm Marlon Bowling, your tour guide to the ag commodities, and I am joined by Brian Hoops of Midwest Market Solutions. He is in Springfield, Missouri, and I have a fair amount to catch up on here, Brian, after the weekend. Let's talk about the setup for today's trade. One thing is weather, and I believe probably you got some moisture over the weekend. From what I understand, we had some stormy weather that went even through the plains. Got a little bit of rain where it was some of the driest, most drought-impacted areas there, but it was accompanied by extreme storms, hail, high winds that may have blown some of the wheat out of the ground before the rain got there. So a little give and take on the weather front there this weekend. What do you think?
Yeah, you're exactly right, Marlon. Good morning, and hope you had a good weekend. We are supposed to get more rain later this week, and it's getting to that point where grass is starting to green up, and things are starting to really bud out and grow, and so that'll be true that winter wheat crop here very soon as well. So the crop needs moisture and needs some warmer temperatures, but it really doesn't need these high winds. And as you alluded to, there may be some crop that even got ripped out of the ground. And we thought that was probably the case back in December, where there was very little snowfall to protect this crop whatsoever. We had high damaging winds that came through some of the plains areas, especially parts of western Kansas, and really could have just uprooted that crop. And so it's kind of hard to determine the extent of the damage right now. But as we get closer to breaking that dormancy and the crop starting to grow, come out of the ground and really grow, we'll be able to give us a better answer. But I think the market's trying to anticipate this rain event that came through. We had sharply lower prices last week. I think losing close to 50 cents in the week in the winter wheat contracts. Now we've taken out these lows in the overnight. We took out Friday's lows, and really the key is going to be for all these commodities, corn, soybeans, and wheat. We took out Friday's lows. Can we close higher today? Can we absorb all that fund selling that has come at the marketplace? And this is coming at the time where we have deliveries and first notice day this afternoon. So it's kind of a key time frame where we absorb deliveries, and then we start to rally usually afterwards. And we could put a low in early this week and then rally the rest of the week.
Okay, so let's take a look at our markets as we have them up to the moment here with our quotes provided by Bar Chart, shall we? On the corn, little bit higher this morning on the March, a penny and a quarter higher, but they go into delivery tomorrow. So we're going to go with May, since most traders have rolled out into that now. And the May just one tick higher at 649.5, and December 2 1/4 higher. We're at 578.5. So let's take a look at soybeans overnight and see what's going on there. On the May contract, 5 1/4 higher. They had a little bit of a flurry here late in the morning hours. We ended up at 1524.5. Well, that's only one tick off of our overnight high. You had September down 1/2 cent. Let's check out that new crop November contract. And here you had it trading on the finish last night a penny higher at 1375. Now on the wheat market in Chicago, first of all, we'll go to that May contract, 2 1/4 lower at 719 1/4, and 719.5 rather. July was 2 lower. In Kansas City, you had the May contract 7 3/4 lower. We were at 827.5, and July went down 7 3/4 as well. Minneapolis wheat last night, it fared much, much better. You had the May contract 2 1/2 higher at 885, and July was 2 3/4 higher. And checking the cotton market here in the overnight trade, cotton, we had that May contract 84 points lower, but you had that December where a lot of your volume is now. December was 96 points lower at 83.36 per pound. We'll come back in a moment, and Brian and I will talk about all the things affecting livestock here on a Monday when we come back. All right, let's go back to Brian Hoops and talk about some of the USDA reports that came out after we closed up the markets last Friday. Well, Brian, we all knew that we had the cattle on feed report coming out Friday after the close. We also, in combination with that, had a cold storage report. So kind of a double-barreled report day. And it was after the markets all shut down for the week. So let's see what the numbers were as we headed into the weekend when everything was already quiet. So we had the cattle on feed number as of February the 1st coming in at 96% of a year ago. The trade was looking for 96.3, pretty close. Placements 96% of a year ago, and the trade was looking for a little over 97. That one I'll have to call a little light. and the marketing's at 104, would be exactly in line with the trade estimates. Any thoughts on the cattle on feed report?
Well, these numbers compared to the expectations are very strong. Very, very friendly type of reports, definitely better than what the trade had expected. And you compare to like year ago levels or overall, these are outright bullish numbers. We continue to see contraction in the marketplace. This is a market that is not going to rebuild these supplies really anytime soon, and it's evidenced by these reports. So, we will probably have a little bit of a minimal reaction to it this morning, but overall it's friendly. The cash trade last week was friendly as well. I do think we could see a little bit of an increase in the show list numbers as some inventory maybe carried over from last week to this week. There was just, some moderate head being traded, especially in the Southern Plains. Some of that 164 trade feedlots were looking for 165, and if they did not get it late on Friday, it doesn't sound like there was that much trade. They may wait until this week to try and get that 165. They kind of have the upper hand with the steer carcass weights being down sharply. They can easily carry them over from 1 week to the next and just feed them out for a few more days and get their asking price that they want.
Well, ahead of that report, everything closed narrowly mixed on Friday. We had the April up in nickel. The deferreds were a little weaker. On the feeders, here we finished up Friday afternoon mixed here too. A little weaker on the nearbys. April down a dime. The deferred's a little stronger. Lean hogs, we wrapped up Friday afternoon trade 60 lower in the May, down 17 on the nearby April. Cold storage numbers, I don't know if they were that friendly, though. You had frozen beef supplies down 2% from a month ago, up 1% from a year ago. Look at the pork, up 13% from last month and up 19% from last year. Is that going to pressure the hog open?
You would certainly think so. The hog market really trades a lot of technicals, but from a fundamental standpoint, it really should. That's a big jump, well above what was expected going into that report for both pork bellies as well as pork stock. So it really should weaken the hog futures this morning.
I wondered about that. All right. Well, thanks for the information. Good stuff, Brian. Brian Hoops of Midwest Market Solutions with us here on a Monday morning.